Ahoy there, trader. Let's look at a break-even trade. It's not worth bragging about, but we can learn more from these trades than we can from anything else. So let's take a look at the charts. Ahoy there, trader, and welcome back. So we're looking at MAR, Marriott Hotel. And this is one of my universe of stocks. It's a great trader. And when we just flip on the algo, we can see why it's in my universe of stocks. If I just trade the way that I've described many times on past videos and trade the trend and buy the dip and manage the trades effectively with consistent rule-based decisions, trying to eliminate all the subjectivity that we as humans bring to trading and just try to objectively trade the data, then we should have something that looks like this, a steady performance over a 20-year period. So it's in my universe of stocks for a reason. If you'd like a copy of that, I'll show you where to get a list of all the stocks that I'm trading that have a positive expectancy for swing trading. Anyway, so that's the why I'm trading it in the first place. As usual, I'm looking for price to be above my combination of moving averages. Basically, this is what the algorithm's doing in the background to give you that performance report. When it's above either two or ideally all three of the moving averages, I'd like to go long. And the idea is to capture those times where price is moving and trending and ignore the times like over here where price is not behaving favorably, to capture the favorable parts and ignore the least favorable parts. So I don't know which trades are going to work any more than the next person. I just know that this is a good stock for my style of trading. You put a good list of stocks with a proven strategy, usually wonderful things happen. Now, in this particular case, management rules were met. Now, we can see that price started to move favorably. I had two trades on this, one here, which again underperformed, it went sideways, and that's fine. The way I trade, just so you know, is with stock options. I use the full price, the premium that I pay as effectively a built-in stop loss. So I don't need to worry about managing the loss. I just need to manage the gains. And in this case, I had a new entry set up develop as well. So that's why we can see two trades highlighted on the chart. Anyway, with that said, price rallied away. It met a management condition, because what I don't want to do is prematurely manage the trade. So like over here, it didn't move favorably at all. It just meandered sideways, and arguably continued to go sideways. But it's only when we start to see price move favorably with predetermined rules that we can say, okay, now it's starting to behave in a way that looks favorable, so that if it suddenly stops being favorable, I can manage the trade. So in this case, it starts to retrace, and if you're not familiar or you're watching this at a future date, this is where the lots of the Russian thing, the Ukraine war essentially is breaking out. And basically, I think Russia's just announced that they're going to war. It's all official. So the market's having a little bit of a hissy fit and a knee-jerk reaction on the back of this. So that's probably why we're seeing an adverse effect here temporarily. Now, I don't know how long it's going to go. It could sell off and fall off a cliff face, and that's cool. But when my management conditions are met, then I want to close my trade. And we can see that the algorithm, the automated rules, closed it at what turned out to be the low of the day. For me personally, I'm a cat's whisker better just about here as I'm recording this, where the markets are open. And what that means is I can close it for a break-even trade. That's all it really means. If I'd closed it, if I was around at the opening bell, I would probably be talking about a small loss. As it turns out, I've got an $85 profit. It's wiped its nose, essentially. So it's a little bit longer video to explain this, because when trades hit target, they take care of themselves. But we need to equally be probably even more strict with the management rules. Hoping that it turns around is not a strategy. Hoping that it doesn't get worse is not a strategy. All I know is that, hey, price has come back to a point where I'm not really interested in this anymore. I've given it enough benefit of the doubt with this moving sideways shenanigans, and as it does move favorably, it didn't put in a big movement, and that's okay. I want to keep my losses minimal. In this case, it's a break-even trade. I don't want to let it turn into a monetary loss position. And that is a very difficult thing for a lot of traders to do, but it's a very good habit to get into. So this is what I'm trying to get across. Make sure that you follow your management rules. We don't know what's going to happen next or tomorrow. If it does start to resume favorable activity, I can always look for a brand new entry. What I can't do is hold and hope that the situation improves and that I start making some of the money that I had up here that I don't have down here. So close the trade, wait for a new opportunity. If you'd like a copy of these 89 stocks that I trade, there should be a link next to this video. When you click that, you'll be able to access all my stocks that I trade for an immediate download in a spreadsheet. Well, that said, I'll see you on the next video. Bye for now.